Hello traders, hope you're doing well. Now, if you're trading in the options market, then I highly recommend you to watch this video without skipping because today we'll be covering a very important topic which every option trader has to know. The topic for today is how to put correct stop loss on the premium chart. It doesn't matter what kind of option trading strategy you're using right now. If you just follow the simple technique which we are going to discuss today, you can significantly increase the success rate of any trade that you take. At the same time, you can reduce the chances of market hitting your stop loss. Now, without further delay, let's begin today's video. Traders, what you're looking at right now is a chart of Nifty 50. Now, while trading, everyone keeps looking at this chart or Bank Nifty chart. Why do we do this? Basically, there are three main uses of looking at this Nifty 50 index chart. Now, the first reason is to understand the sentiment of the market. This is based on the top 50 stocks. Nifty 50 index chart is a representation of the top 50 stocks, isn't it? Now, while looking at this chart, if market is forming lower highs and lower lows and moving towards the downside, we say that the current sentiment of the market based on Nifty 50 index is bearish. In case the market is forming higher lows and higher highs and moving towards the upside, we say the sentiment of the market is bullish. In case the market is just staying within this range, then we say the market is neutral or sideways. So this is the first reason why we look at Nifty 50 chart, to understand the overall sentiment of the market based on the top 50 stocks. Now the second reason why everyone looks at Nifty 50 chart is because we need to identify a trading setup in this chart itself. Now we all know that in this Nifty 50 chart, we cannot take any trade. It is just representing the sentiment of the market. But still, why are we trying to identify a trading setup on this chart? Now let me explain that to you with an example. First, let's see if there is any trading opportunity here. You can see that here we have found out a trading opportunity where this is acting as resistance and this trend line is acting as support. Now this looks to me like a symmetric pattern. From here the market can either give a breakout or breakdown. So this is a trading setup that we have identified on the index chart. Traders, this is our free Telegram channel. We have around 24,900 subscribers. If you're finding it difficult to identify trading setup, you can definitely follow this channel. Because on a regular basis, we keep sharing high quality trade setup for Nifty, Bank Nifty and Fin Nifty in this channel. So if you're interested, you can scan this QR code to join the free Telegram channel. I will also share direct link for this free Telegram channel in the description box below. If you're interested, you can check it out. Now let's get back to the video. Now imagine that tomorrow market just consolidates like this, and if it gives a breakout, many retail traders, they will be interested to enter a call option trade at this breakout. Once they are interested to buy a call option, only then they will decide which strike price to choose. Do they enter a call option trade at 19,800 or 19,750 strike price or 19,900 strike price? This a retail trader will decide later. When the index is showing a breakout setup, many people will be interested for a call option trade. Some of them, what they do is they open the premium chart. For example, if a person might open 19,900 strike price, here he might be looking for a breakout setup. All we need to understand is each strike price, the chart pattern will be different. Maybe 19,750 strike price might have already given breakout and it would have moved along with Nifty's momentum because it is in the money strike price. But maybe because of time value or other option Greeks reason, 19,900 strike price might be just consolidating within a range. For a person who's looking for a breakout setup here, he might already miss out the opportunity what other people try to capture. When majority of the people are looking at the index chart for trading opportunity, it is important that even we look at the index chart to plan our trades. Now, once we identify the trading setup on the index chart, immediately we have to plan our trade. While trading in options, we need to choose a strike price, right? In this case, let's say I chose 19,800 strike price, which is at the money. Now traders, always remember we plan our entry based on the index chart, but the stop loss should be decided based on the premium chart that we choose. In this case, 19,800 premium chart I will open. Traders, here you can see we have two charts. On the left side, we have Nifty 50 index chart. On the right side, we have 19,800 call option chart for the current expiry. Now, I have chosen this chart because, like I said, just imagine here we got a breakout opportunity to buy a call. So we use this index to plan our entry. As soon as we got entry confirmation on the index chart, it doesn't matter at what premium this strike price is trading at. Let it be here, here, or let's say it gave a breakout or it did not give a breakout. It doesn't matter. Index chart is telling us to enter, so we will enter the trade. So our entry is based on the index chart, but our stop loss will be based on the premium chart. Some retail traders, they will look at the index chart. They will say if market comes to the support or if it goes little lower, I will plan my exit. This is not how it works. We have to always plan our stop loss on the premium chart. So on this premium chart, what can be a reasonable stop loss? Now usually what many retail traders do is, for example, if they're entering the trade somewhere here, they will see what is the recent support or resistance level. Now in this case, I can notice that this level is acting as a good support because the first time market bounced from here, second time, and this is the third time. Many retail traders, what they will do, they will keep this value as their stop loss, which is 87.15. Now some more retail traders, what they will do, they will round it off to 87 or 86.5. But many times what you would notice is the market will give a breakdown, hit your stop loss, later it will move towards the upside. If this is happening to you, what you can do is you can start using the ATR indicator. This is also called as average true range indicator. This is a free indicator which is available with all the brokers. Just go to the indicator section and search for ATR, average true range. Now here you can see the ATR indicator has been plotted on the chart. With the help of this indicator, we can significantly reduce the chances of market hitting our stop loss. Basically what this indicator does is it will look at the average price momentum of 14 candles and it will give you the result. So as per this indicator, recent 14 candles momentum is 5.3 points. That means from the current value, the market can move up by 5 points or move down by 5 points in an average. So if you enter the trade at 92, the chances of market hitting your stop loss if you place it here is very high. So what you have to do is wherever you decided to place your stop loss, in this case it is 87.15, right? From this value you have to subtract the ATR value. If you just go to the recent candle, you will get to know what is the ATR value. It will pop up here, 5.03. So 87.15 minus 5.03. Let's calculate. It comes to 82.16. Now let's round this off to 82. Okay. So 82, where is it? It is here. I'll mark that level. So instead of placing a stop loss at 87.15, if we place a stop loss at 82 points, the chances of market hitting a stop loss will significantly reduce. More than this, no need to give stop loss for any kind of trade. See here, what will happen is in case the market gives a breakdown, here many people will enter a put option. After trapping put option buyers, the market might start reversing. At that time, we can avoid the chances of market hitting our stop loss. At the same time, we can increase the chances of market achieving our target levels. Not only me, many of my followers have started using the ATR tool to place their stop losses. They have seen very good results. Even I would suggest you to just give it a try and see the results. I'm very sure that you will significantly reduce the chances of market hitting your stop loss. Now in this video itself, let me tell you one more method how retail traders place stop loss. Now let's say we got a breakout here. Now many retail traders, what they will do, they will consider this level as a support or this level as a support in the index chart. Then what they will do is they will go and check the time of this candle. What is the time of this candle? It is 3 o'clock 5 minutes, right? So they will come to index chart. In this, they will see where is 3 o'clock 5 minutes candle? It is here. So at this level, they will place their stop loss. If market hits this level, they will exit. Here also I will tell you the chances of market hitting this level is really high. Even if you're considering this level as stop loss, you should give additional buffer here based on ATR. Whatever is the stop loss based on ATR, in this case, give 5 points more buffer. This will increase the accuracy of your trade. Now, some of the retail traders will consider this level as support. In case Nifty comes here, they will exit or else they will hold their trade. Here also what they will do, they will see the low of this candle. What time it is? It is at 10:10. They will come to the premium chart. They will see where is 10:10 candle. This is the candle. So below this, they will keep stop loss. But can you see? Market moved towards the upside, but later came down, hit that stop loss, again moved towards the upside. Instead of considering this as a stop loss level, here also if you had given extra buffer based on ATR, here also you would have avoided market hitting your stop loss. This is a very important tool which I would suggest everybody to have a look at. Whatever is your strategy, wherever you're keeping stop loss, based on ATR, give that extra buffer. This will significantly increase your success rate. I'm very sure about it. Instead of trading in the live market, just do 2 or 3 paper trades with the same setup which you're following right now. There itself you will be able to see the results. Okay. So first thing, we are going to understand the sentiment of the market or the trend of the market based on the index chart. Let it be Nifty, Bank Nifty, the rules is the same. Second, we look at index chart for trading opportunity. For example, breakout or breakdown or any other trading setup. But stop loss should be put on the premium chart because this is where we are going to take the trade. And whatever is the stop loss level, addition to that, we have to give a buffer based on the ATR value. If our stop loss is 10 rupees, if ATR is showing average momentum is 2 rupees, then our stop loss will not be 10, it will be 8 because 10 minus 2 is 8. Okay. Now, if you remember in the beginning of the video, I said that we look at index chart for 3 reasons. First is the trend, second is to find trading opportunity, and the third reason is target. Always remember our target should be based on the index, not on the premium chart, because many people will plan their exit or the trend of the market reverse based on the index. For example, you placed your stop loss here, enter the trade at this breakout. On this premium chart, let's say your target is somewhere here. But in Nifty, let's say the target already got achieved at this level and it is reversing. But this premium chart, let's say it is only moved up to this level. It has not yet reached the target. At that time, we have to exit the trade because index has already achieved the target. The market doesn't care if our premium chart has given the target or not. Everything is based on the index, not on the premium chart. So only based on the premium chart, we have to put stop loss. Based on the index chart, we have to keep our targets. Now, whatever I explained for call option trade, the same thing applies for put option trade. In case market gives a breakdown here, immediately we should plan for put option because the index has given a breakdown. This is just an example of the trading setup I'm telling you. There are many trading setups. Traders, if you are interested in option trading, you can check out this free playlist on YouTube. Here we have covered all the basic to advanced level concepts related to option trading. And if you're serious about intraday trading, you can check out this 1-hour intraday masterclass video. For more videos like this, subscribe to our channel. Thank you for your time. I'll see you in the next one.